You ask the question, please state your name and your organization, and please limit the questions to two per person. Over to you. Yes, sir.
Hello.
Hi. I'm here. Yes, invite, please. Hi, Shilal from Money Control. Just wondering about the BPSL situation. Of course, the co-location part is important, but given the situation right now regarding the legal matter, is there a risk to the company? You mentioned it in your risk factors as well. So, what is your kind of outlook on that?
I think from our perspective, we have a binding contract with PPSL at a arm's length for both the slag as well as for the fly ash. So we see no material risk in terms of any ruling that may happen, whether in the favor or against JSW Steel, should not impact our contract with the company, as we are buying both the slag as well as the fly ash at an arm's length, which means at the same price at which they are offering the slag and fly ash to third parties. So I don't foresee any major issue from that case, but as is prudent corporate governance, we mentioned it as a risk, but we feel very confident on there being no issues for that location and that unit.
Just an additional question on the debt. It is slightly on the high side. I think more than 4,000 CR is the debt. So from the IPO proceeds or thereafter, what are the deleveraging plans?
Yeah, as you know, JSW, we don't do anything without debt. So you know, everyone knows that. But in terms of for us, I think we have been deploying this capital for future expansion. So close to 1,500 crores of the debt number that is visible has gone towards the expansion projects, which include the acquisition of the limestone mines in Madhya Pradesh from India Cement, where we spent close to 600 crores, plus the ongoing investment at Nagaur in Rajasthan, along with the coal mines that we have also taken. So if you look at our debt, without that 1,500 crores, we're looking at about a 3.2 times net debt to EBITDA, which also we feel is slightly higher than what our comfort level is, because last year the performance of the industry was very subdued. Going forward, we have plans of repaying about 520 crores through the IPO, and we would like our net debt to EBITDA ratios to significantly come down, which we have a board guidance of being lower than 2.5 times net debt to EBITDA in the medium term. Sure, there could be certain quarters up and down given the market dynamics, but over the medium term, we would like to be lower than 2.5 times net debt to EBITDA.
Good afternoon, team JSW. I am Mehul Dani from FinTech Business. What are your market differentiators which gives you an edge in the business, and how do you deploy technology to bring in the cost efficiency and higher productivity? Thanks.
Thank you. In terms of market differentiation, like we mentioned in the presentation, we have two products, namely one is cement and the second is GGBS. Now, if you look at GGBS, we have 84% market share in this product, and in our markets of South and West, we have over 90% market share. Like I mentioned, we have pioneered this product in the country, and nobody else, none of our competitors would be able to compete with us in this product, primarily because 8 out of the 9 blast furnaces that are located in the south and western part of the country, the major blast furnaces, all belong to the JSW group. Other than the one blast furnace, which is ArcelorMittal in Hazira, the rest of the blast furnaces, whether in Dolvi, whether in Salem or in Vijayanagar, all belong to the group. Hence, our cement plants, our grinding units, which are co-located within the steel plants, have the lowest logistics cost, and we have set up conveyor belts directly from the blast furnace to our grinding units. which allows us to manufacture this product at a very attractive price, which allows us to command this kind of a market share. In terms of our cement product, we are primarily a slag cement player. We pride ourselves on being a slag cement player, whereas other people in our industry, in our regions, are primarily selling fly ash based product. So that is one differentiator. And the second is we leverage the group synergy when it comes to distribution of our products. So as we all know, cement and TMT rods are sold at the same counters. And JSW Steel is the largest TMT producer in the country and the most premium. And hence, this gives us a very, very good head start whenever we enter any new geography. In terms of technology, I think all our plants are state of the art. Our oldest plant was set up in the year 2012. So as you can imagine, these are all modern, super efficient, integrated and grinding units. We would be having the most modern setup amongst any cement company in India because we are the youngest cement company in India. So that's one. Second is we have used digital, especially for our logistics capabilities, because the cement industry is prone to a lot of malpractice when it comes to distribution of the product. Backloading and various other terms are used. What are the other terms? Yeah, the main one. So we have a digital control tower which monitors each and every truck that leaves our plant through GPS and make sure that they are taking the correct route and they are supplying the cement as per the order, so that there is no diversion and no such inefficiency that comes in. We also have integrated our digital tools for all our retail partners as well. So whether it's ordering of the cement, tracking of their cement, tracking of their accounts, making sure that their payments happen on time, the ledgers are all available at the click of a button, not only for our retailers but also for our masons and contractors. So we are trying to use digital in every walk of our life and trying to be one step ahead of the rest of the industry, and our relatively smaller size allows us to adopt digital faster and be more nimble.
Mumbai Samacha. You mentioned about expansion in the north. So you mentioned about Rajasthan. So what would be your capacity addition, and what would be apart from this 800 crore total investment? You also mentioned about the Punjab, but it is not part of the object. Why it is so?
It's not part of the
Punjab.
It's not part of the
Okay.
Sure. Yeah, so North India is very important for us. I'm personally very excited to come to North India. That's where the family is from, and we are wanting to sell cement in Hisar also. That's where we're from. So we're excited to get into the north. Totally, we would be investing 3,300 crores. 2680 crores into Nagaur, and then we have another 800 odd crores that we would be investing over time into Talwandi Sahu in Punjab. As you know, the rules and regulations of SEBI are very, very stringent, and until and unless you don't have all the approvals in place, including the land, including the environmental approvals, including all the clearances, you are not allowed to put it into the object. And hence only Nagaur is in the object, because we have everything in place and the work is underway, and over how many crores you can say? How many crores have we spent already in Nagaur?
So 1240 odd crores is already spent as on 30th of June.
Yeah, make sure the number, I don't give the July number. So 1240 crores has already been spent. Nagaur, we are setting up a 3.3 million ton clinkerizing unit and a 3.5 million ton grinding unit. And then Talwandi Sahu, we would be adding 2.75 million tons of grinding. So total our entry into north, we are looking at having an initial capacity of 6.25 million tons, with the first 3.5 million tons commissioning by July 2026, which we hope to improve upon because the project is going faster than that as of now.
Hi, Sajid here from NDTV Profit. If you can give us an understanding of the operating leverage that you have in the industry, because last year was a bad year for the cement industry and from volumes and pricing point of view, and we saw your cash flow from operations half in FY25. So if you can give us an idea of what kind of leverage that you have and whether you're able to encash that leverage, because you said you have a lot of synergy within the groups. And also because your GGPS, which gives you much more ability to, protect your margins, but still your cash flow from operations halved in FY25.
No, so we have GGBS, which Parth mentioned. Now here, this number, the volume that we did last year, about 5.2 million, can only improve from there. The market that we cater to today, we are improving upon that, we are reaching to new geographies. So that's one operating leverage that we enjoy. And we have set up, or we are increasing the renewable power sources for us, which would bring down the cost substantially.
I think the question, if you look at the numbers, even though cement prices in India declined, in our markets declined by almost 10% last year, we were able to, our EBITDA performance declined from 1100 odd crores to 865 crores, which is roughly a 20% drop in EBITDA. So we were able to counter a huge drop in the cement prices due to the fact that we have this strong product in GGPS. Now with cement prices having recovered, we are very hopeful of much better performance. As well as with our volumes going up, we are very confident of our overall net debt to EBITDA leverage coming down.
Okay, and the second question is with respect to the capacity addition that you're looking at 20 to 41 over a period of I think 3 to 5 years, which you're looking at. What is kind of capex for that capacity as and when? Because even if you assume 1,000 crores per million ton kind of cost, would be around $1.5 to $2 billion that would be needed to expand to that level. How will you generate that kind of, of course you said that is integral part of your capex that you said, but given that you already have a high leverage of 3.2, so can you give us a sense of how this is going to be, and if inorganic opportunities come in, are you open to that as well?
Yeah, I think from our perspective, we have charted out our plan from 20.6 to 41.85 million over the next 3 to 4 years. And what I can share is that it will be at a substantially lower capex per ton than the industry is doing. Whether they are doing greenfield or brownfield or acquisitions, this would be at a substantially lower price. And hence my excitement to grow organically is far greater than my excitement to acquire any capacity that becomes available. I can't share the specific numbers because that's something that we have worked very hard on, and we don't want this to be known by any of our competition. But it is much lower and much more efficient than what anybody else has been doing in the industry. And we've learned a great deal from JSW Steel. And I can tell you that if they were doing this capex, they would do it at an even lower cost than us. So we are trying to understand more on how to bring this down, but it is very, very efficient, and I would say at least 40% lower than any other player in the industry.
Hi, Team JSW, congratulations. It's been a while. We hear about these new age companies. So good to see old economy company coming for an IPO. We waited this for a long time, and congratulations to the bankers as well as the team. My question is with regard to the inorganic growth. By nature, the group has been quite aggressive if I look at the steel space as well. But you have been missing in action. Was it because the IPO was in the offing, and now we'll see some more aggression on that front? I take your point with regard to cost per ton. But was that one of the reasons that you were missing in action on the inorganic front?
No, I think as a group, we definitely attempted to acquire wholesale when that was available, but that was not JSW Cement looking at that acquisition. That was the whole group coming behind and trying to acquire this entity because of the kind of opportunity that provided and the kind of stepping stone that gave and the foundation it gave. Obviously, that didn't materialize. After that, we have studied all the assets that have been available, whether it was an Orient Cement or a Penna Cement or a Sanghi Cement or an India Cement.
Yes.
We've looked at every asset and all the bankers here have approached us for all these assets as well. Like I mentioned, for us when we look at our growth journey and our growth map and we look at the kind of opportunities and the kind of geographies that we are able to enter, whether it's North India, which is a very attractive market, whether it's Central India, which again is a very attractive market, and at the cost at which we are able to enter through organic route, we feel that that's a more prudent strategy for us. Second point is that everyone here knows the cement industry, very large players, very entrenched players, very strong balance sheets with low debt, low to no debt and cash. So if any one of them wants to acquire anything, so if an Ultratech or an Adani or a Dalmia or a Shri want to acquire anything, they can outmuscle JSW Cement very easily. So I have deep admiration and respect for all these players. Right now, we don't have the auqat, I would say, to challenge them in any acquisition. Now with the IPO, with liquidity, with our ability to maybe do a QIP if required, maybe do a FP follow-on if required, if an asset becomes available in an attractive geography, we may consider it, but the prices for these acquisitions and the benchmarks that have been set by the leading players make our organic story a much more appealing, value accretive story than any acquisition.
Alright, so it's going to be build rather than buy. Just one more question before I hand the mic to someone else. You will have two listed entities now, Shiva Cement and JSW Cement. In the past, we have seen it with steel as well. You will have actually looked to have one listed entity. So at some point of time, would you say that there will be one listed entity from the JSW stable?
I think each company has its own strategy and it has its own shareholders. Whatever is in the interest of the minority shareholders, we will evaluate that, take it to the respective boards, and then evaluate what is the right way forward to maximize value for both sets of shareholders.
But so a merger could be something that we'll think about in the years to come between the two entities, because otherwise that's a very small unit over there.
Yeah, like I said, whatever maximizes value for minority shareholders of both companies will be evaluated by both the boards, and whatever strategy makes the most sense will be adopted.
Alright, thank you so much. All the best.
I think we'd like to take one last question in the room, and then there are a couple of questions online. So we'll go to the gentleman at the back, please.
Hello.
Yeah, hello. So, could you throw some light on the future acquisitions like Orient Cements or something like that? Are you looking at it?
Yeah, Orient has already gone to Adani's. So,
any other acquisitions you are looking at going forward?
No, like I mentioned, I think for us, building is something we are very focused on, at least till we get to 41, 42 million tons. After that, let's see what's available. As of now, nothing exciting in an exciting geography. There are exciting companies available, but not in an exciting geography. So we will wait if and when such an opportunity comes. Hopefully by then we'll have enough firepower to challenge the big boys.
Thank you. And one last question. Anything about exports you would like to share? Are you looking at exports?
Yeah, I think export is a big opportunity, especially to the Middle East, especially for off GGBS. So we are evaluating those opportunities. There is a huge demand for GGBS all across the Middle East as well as in Europe, given that it's a green product. So we are looking at those opportunities, and even the new steel plants of JSW Steel which are coming up in the coastal belt of the new steel plant which will come up in Odisha, in Jatadhar, that will give us a big opportunity to export GGBS, plus the Dolvi unit when we expand the Dolvi unit. If and when the demand in Mumbai MMR slows down, we can look at export, but right now we are super sold out of this material in the MMR region. We can't wait for the new blast furnace of JSW Steel to come fast.